Welcome to the Flexi Staff Cover Training course. Here you will learn about the different benefits offered: life, occupational disability, critical illness, temporary income protection, and funeral cover. Let's get started. What is Flexi Staff Cover from Simply? Flexi Staff Cover is a group insurance product that employers buy for their employees. It has 5 benefits that can be mixed and matched in real time. No paperwork, no waiting. Life cover pays a lump sum on death, up to 2.5 million rand. Occupational disability pays a lump sum for permanent inability to work. Critical illness pays a lump sum on a qualifying diagnosis. Temporary income protection pays a monthly income during short-term inability to work, up to 100,000 rand a month. And funeral cover pays for funeral costs for the employee and their family, up to 100,000 rand. Each benefit can be switched on or off individually. The employer decides what to include and how much cover to provide. Part 1. Life cover. In this section, we'll cover what exactly life cover is, who is eligible, the key rules and exclusions, and how to explain it to your client. Let's get into it. Life cover. What is it? Life cover pays out a lump sum to the employee's beneficiary, often family members, when they die, whether from natural causes, accident, or illness. Eligibility: permanent full-time employees, employees on fixed-term contracts longer than 6 months, age 18 to 65, or 69 if they were employed before 64. For new policies only, employees aged 65 to 69 may be included for life cover at inception, provided they have been employed by the company since age 64 or younger. If an employee is diagnosed with a terminal illness and is expected to die within 12 months, they can claim the benefit early. Key rules and exclusions. A few important rules brokers must know. The pre-existing condition exclusion applies to groups with fewer than 20 employees. For the first year, claims related to a condition the employee was aware of, had symptoms of, or received treatment for in the 12 months before cover started will not be paid. Claims that will not be paid include suicide or self-injury within the first 2 years, participation in terrorism, riot, or war, criminal activity including drunk driving, refusal of recommended medical treatment, and hazardous pursuits. Cover amounts range from 50,000 rand minimum to 2.5 million rand maximum, capped at 5 times annual salary for salary-linked structures. Employees must be between 18 and 64 when added, and cover terminates at age 70. How to explain it to a client? Imagine if one of your employees passed away today. Their family would be left without an income, possibly losing their home and taking their kids out of school. Simply staff cover means that their family receives a meaningful lump sum that helps them to support the kids through school, keep food on the table, and give the family time to rebuild. And the cost to you as the employer? Often less than 100 rand per employee per month for this and the other 4 benefits combined. Key facts to know. Maximum cover is 2.5 million rand. Cover is paid to nominated beneficiaries into a South African bank account. There is also a terminal illness accelerator. If terminal illness is paid out, only the life cover benefit falls away. The employee can still claim on disability, critical illness, and funeral cover. Pre-exclusions apply to groups of fewer than 20 staff for the first year. Part 2. Occupational disability cover. In this section, we'll explain what occupational disability cover is, key rules and exclusions, benefit reduction nearing retirement age, and how to explain occupational disability cover to your client. Let's get started. Occupational disability cover. What is it? Occupational disability cover pays a once-off lump sum when an employee can no longer do their current job or any other suitable job permanently. Unlike temporary income protection, which covers a short-term inability to do your specific role, occupational disability is about permanent incapacity assessed against the employee's education, skills, and broader work experience. Cover ends at age 65, or normal retirement age if earlier. The maximum entry age is 64 years old. Occupational disability, key rules and exclusions. How permanently disabled is defined. Permanent disability means the insurer determines the employee can no longer do their current job or any other suitable job, taking into account their education, skills, and experience. This is a stricter test than temporary income protection, which only looks at the current role. Cover amounts are minimum 50,000 Rand and maximum 5 times salary linked, or 6 times lowest earner salary fixed in with overall cap of 2.5 million Rand. Cover cannot exceed the life cover selected. The pre-existing condition exclusion applies to all groups regardless of size, that is, a 1-year exclusion for any condition treated in the 12 months before cover started, even if disclosed during underwriting. And remember, the benefit only becomes payable 6 months after the disability began. It's important, especially for older clients, to realize that the occupational disability benefit reduces by 20% per year during the 5 years leading up to the company's normal retirement age, or age 65, whichever comes first. At age 60, the benefit is at 100%. By age 61, it's 80%. Age 62, 60%. Age 63, 40%. Age 64, 20%. And at 65, it terminates completely. This reduction applies to occupational disability only, not to temporary income protection, life cover, or funeral cover. If an employee joins the policy already over age 60, their cover starts at the reduced level from day one. The 6-month deferred period still applies, and at age 65 or normal retirement age, the occupational disability cover terminates completely. Make sure that clients with older employees understand this when setting cover amounts. How to explain occupational disability cover to a client. Imagine you have a serious accident or illness, and you cannot go back to your job or any other suitable job. Occupational disability cover pays you a tax-free lump sum, a once-off payment to help you rebuild your financial life. Unlike temporary income protection, this is for permanent disability. The insurer considers your education, skills, and experience when deciding if you can do any other suitable work. Key facts to know. Occupational disability cover is a lump sum paid once, tax-free. It pays out only for a permanent disability, meaning an employee cannot do their current or any other suitable job permanently. It requires life cover to be in place. The benefit must be equal to or less than the life cover amount. There is a 1-year pre-existing exclusions period and a 6-month deferred period applies before payment begins. Part 3. Temporary income protection. In this section, we'll take a look at what exactly TIP is, how much clients will get, the deferred period explained, what is not covered, and how to explain temporary income protection to your client. Let's get into it. Temporary income protection. What is it? Temporary income protection pays a monthly income, similar to the employee's normal salary, while they are temporarily unable to work. How much will clients get with temporary income protection? The benefit is based on a percentage of the employee's salary, and there are 2 options. The employer chooses one option for the whole group. Option 1 is a tiered percentage of salary, 80% of the first 10,000 Rand, 65% of the next 20,000, 60% of the next 30,000, and 50% above 60,000. For example, an employee earning 15,000 a month would receive 11,250 Rand. Option 2 is a flat 75% of monthly salary for all employees, regardless of salary level. This one is simpler to explain and administer. Important caps to note. The benefit cannot exceed the employee's actual take-home pay. The maximum is 100,000 Rand per month. If the employee has other income cover, the total is capped at take-home pay. It must be taken with life cover, and it stops at normal retirement age of 65. Deferred period explained. There are 2 concepts that the client needs to understand. First, the deferred period. This is the waiting time before payment starts. The employer chooses 1, 3, or 6 months. Critically, the deferred period counts inside the total payment period. So if the employer selects a 12-month payment term with a 3-month deferred period, the employee waits 3 months, then receives 9 months of payments, not 12. A longer deferred period means fewer actual payment months. The second thing to note is that the employee can claim again after recovering if they become ill again less than 6 months after payment stopped. When this is the case, the deferred period is waived and payments resume immediately. But if the second claim occurs at least 6 months after the end of the first benefit payment period, the employee can claim again as a fresh claim, with the full payment period available and the deferred period applying normally. What is not covered? Be honest with clients about what temporary income protection does not cover. Pre-existing conditions are excluded for 1 year. Anything the employee had, showed symptoms of, or was treated for within 12 months before cover started. The employee must be completely unable to perform their specific job duties. Partial inability does not qualify. No benefit is paid for attempted suicide or deliberate self-injury, ever. Participation in war, terrorism, riots, or civil unrest is excluded. Radioactive exposure or nuclear events are excluded. If a registered doctor recommends treatment and the employee refuses, no benefit is paid. Cover stops completely on the employee's 65th birthday, even if they're still employed. Criminal law violations such as drunk driving or any other illegal activities are not covered. And unlike life cover, TIP does not offer accidental-only cover above the free cover limit. Here's how to explain it to a client. What happens if you get sick or need an operation and you can't work for 3, 6, or even 12 months? Your employer stops paying, but your bond, your groceries, your school fees, they don't stop. Temporary income protection fills that gap by paying you a monthly income, similar to your normal salary, while you are unable to work. It is not forever. It pays for a set period, 6, 12, or 24 months, chosen by the employer at inception. The money goes tax-free, directly to you. Key facts to highlight. TIP pays monthly, not as a lump sum. There are 3 payment terms, 6, 12, or 24 months. There's a deferred period of 1, 3, or 6 months before payments start. TIP stops when the employee returns to work or turns 65, and it requires life cover. It is not a standalone benefit. Let's move on to the next benefit. Part 4, Critical Illness Cover. In this section, we'll take a look at what exactly critical illness cover is, core versus comprehensive, the conditions covered, understanding severity levels, what is not covered, how much can clients get, CI versus TIP, common client questions and how to answer them, how to sell CI and TIP effectively, key rules at a glance, and how to explain critical illness cover to your client. Let's get started. What is critical illness cover? Critical illness cover pays a lump sum directly to the employee upon a qualifying diagnosis, cancer, heart attack, stroke, and more. It is important to note that the employee must survive for 28 days after the diagnosis to claim. If they die within 28 days, only life cover pays out. Core cover versus comprehensive cover. Your clients will need you to explain the difference between the 2 critical illness options. The core option covers 11 conditions and only pays when the illness reaches severity B or higher. 0% for severities C and D, 75% for severity B, and 100% for severity A. It's the affordable option for clients who want protection against only the most severe outcomes. The comprehensive option, however, covers 24 conditions and pays across all 4 severity levels. 25% for severity D, 50% for severity C, 75% for severity B, and 100% for severity A. This is often the right choice for clients who want broader protection, including earlier stage cancer diagnoses and less severe cardiac events. The core option covers 11 major conditions: cancer, stroke, heart attack, coronary artery bypass, kidney failure, respiratory failure, major organ transplant, paralysis, blindness, coma, and severe burns. The comprehensive option adds 13 more: heart valve surgery, aorta graft surgery, cardiomyopathy, liver failure, loss of 2 limbs, loss of speech, motor neurone disease, Parkinson's disease before age 65, advanced dementia, or Alzheimer's before age 65, multiple sclerosis, severe ulcerative colitis, lupus, and accidental head injury. When presenting this to clients, emphasize that comprehensive covers a broader range of diagnoses. Understanding severity levels. Payout amounts depend not just on the diagnosis, but on how severe the illness is. At the time of claim, using cancer as an example, severity A, the most severe, like stage 4 cancer, pays 100% under both core and comprehensive. Severity B, significant spread like stage 3, pays 75% under both options. Severity C, early invasive cancer, like stage 2, pays 0 under core, but 50% under comprehensive. Severity D, a very early stage, like stage 1, pays 0 under core, but 25% under comprehensive. This is the most compelling argument for recommending comprehensive cover over core if it is affordable for client. Early detection is more common today, and comprehensive is the option that rewards it. What is not covered? All exclusions need to be disclosed to clients upfront. Let's have a look at what exactly they are. Critical illness cannot be held without life cover. If life cover is cancelled, the critical illness cover is cancelled too. The critical illness cover amount can never exceed the life cover amount. Pre-existing conditions are excluded for 2 years. Any illness the employee had shown symptoms of or was treated for in the 12 months before cover started. Under core and comprehensive, early stage cancers including carcinoma in situ, non-melanoma skin cancers, and low Gleason score prostate cancers are not covered. If an employee refuses treatment recommended by a registered medical practitioner, no cover will be paid out. The 28 days survival rule applies. Death within 28 days of diagnosis means only life cover pays. Parkinson's and dementia are only covered before age 65, and all critical illness cover terminates at age 65, even if the employee is still working. No benefit is paid at any time if the inability to work is caused by attempted suicide or self-harm, and criminal law violations such as drunk driving and illegal activities will also be excluded. How much cover can clients get? How much critical illness cover a client can get is linked to the employee's salary and the life cover selected. For salary-linked structures, the maximum is 3 times annual salary. For fixed benefit structures, it's 4 times the lowest earner's annual salary. The hard cap is 2.5 million rand, and the benefit can never exceed the life cover amount. The minimum cover for critical illness is 50,000 rand. Above the free cover limit, health declarations and answering health questions are required. If an employee has health issues, cover stays at the free cover limit. And unlike life cover, there's no accidental only option above that limit for CI. Here's how to help clients understand the difference between critical illness and temporary income protection. First, both critical illness and temporary income protection require life cover. Critical illness pays a lump sum when a severe illness is diagnosed. Temporary income protection pays a monthly income when the employee is temporarily unable to work. Critical illness may pay multiple payouts, but the total can't exceed 100% of the sum assured. Temporary income protection pays out monthly for a set period of time. Critical illness pays on a qualifying diagnosis. Temporary income protection requires complete inability to do the job. Critical illness is once off. Temporary income protection is ongoing for 6, 12, or 24 months. Critical illness has a 28-day survival period. Temporary income protection has a deferred period of 1 to 6 months. Both stop at the age of 65. Both are tax-free. Critical illness has an exclusion period of 2 years for pre-existing conditions. Temporary income protection has an exclusion period of 1 year for pre-existing conditions. The maximum benefit payout for critical illness is whichever is the lowest of 3 times annual salary, 2.5 million rand, or the life cover amount. The maximum benefit payout for temporary income protection is up to 100,000 rand per month, capped at the employee's take-home salary. The main difference: critical illness cover is about a health event and financial resilience. Temporary income protection is about replacing income while you're off work. Here are 6 questions you'll probably get asked and some tips on how to answer them. I already have medical aid. Why do I need this? Medical aid pays the doctors and hospitals. CI and TIP pay the employee for the bond, groceries, school fees. Very different purposes. What if I had high blood pressure before I joined? Pre-existing conditions are excluded. For CI, pre-existing conditions are excluded for 2 years. For TIP, the exclusion period lasts for only 1 year. After that period, you are covered. What if I get cancer, but it is early stage? For core cover, you may get 0%, depending on severity. For comprehensive cover, even early-stage cancers pay 25 to 50%. This is a key selling point for comprehensive. What if I can still do some work, just not my full job? For TIP, you must be completely unable to do your specific job. Partial inability does not qualify. For CI, it depends on the specific condition and severity. What happens to my CI cover if I leave my job? Unfortunately, CI cover and temporary income protection cannot continue after you leave employment. Unlike life and funeral cover, it falls away immediately. Tell clients this up front. How does it work with multiple critical illness claims? Example: if an employee has comprehensive CI and gets diagnosed with stage 1 prostate cancer, they get paid out 25%. If the cancer then progresses to stage 3, 75% payout. Because they were already paid out for the same condition, they will receive 75% minus 25% already paid out. However, if they were later diagnosed with stage 3 stomach cancer, which is not related to the prostate cancer, then they will get the full 75%. Then the benefit will end, because they would have been paid out the full 100% in total, 25% prostate and 75% stomach. Here are a few tips for selling these benefits effectively. Tip 1. Know the group size. Ask, how many employees? It determines free cover limits and whether health questions are needed. More employees means higher free cover and simpler onboarding. Tip 2. Use real rand examples. A stage 3 cancer diagnosis on comprehensive with 500,000 rand cover pays 375,000 rand, enough to cover a bond for 3 years. Make it tangible. Tip 3. Temporary income protection and occupational disability work together. The disability benefit has a 6-month deferred period. TIP can bridge that gap. Recommend them as a pair. Tip 4. If it's affordable for the client, consider comprehensive cover for lower income earners. Even smaller payouts at early stage cancer detection can be life-changing. Tip 5. Always disclose exclusions first. Clients with pre-existing conditions need to know upfront. Honesty now prevents disputes at claim stage and protects your reputation. Tip 6. Remind the employer they select the options and pay the premiums. Employees receive cover as a workplace benefit. Help the employer understand the value they're creating. For quick reference, let's go over the key rules at a glance. Critical illness cover requires life cover. Follows the 28-day survival rule. Core covers 11 conditions. Comprehensive covers 24. Core pays 75 to 100%. Comprehensive pays 25 to 100. It includes a 2-year pre-existing condition exclusion period. Maximum payout of 3 times salary, the life cover amount, or 2.5 million, whichever is less. Minimum benefit cover is 50,000 rand. The benefit stops at 65 and the payout is tax-free. Temporary income protection requires life cover, pays monthly only, has a payment term of 6, 12, or 24 months. The deferred period of 1 to 6 months counts inside the total term. An employee must be completely unable to do their job. The benefit is a tiered percentage, or flat 75%. It includes a 1-year pre-existing condition exclusion period, is capped at 100,000 Rand or take-home pay. The benefit stops at 65, and the payout is tax-free. It is important to note that payouts for critical illness, temporary income protection, and occupational disability do not reduce the life cover amount. How to explain it to a client. Imagine a cancer diagnosis. The hospital bills are one problem, but what about the bond, groceries, and school fees? Critical illness cover pays the employee directly, and they decide how to spend it. Key facts to know about critical illness cover. The payout is tax-free and can pay out multiple times, up to the total of the sum assured. There are 2 options, core and comprehensive. Clients need to take out life cover in order to get critical illness cover. There's a 2-year exclusion period for pre-existing conditions, and importantly, the employee must survive for 28 days after the diagnosis to claim. Part 5. Funeral cover. In this section, we will be looking at what funeral cover is, payout amounts per person, premium waiver, and body repatriation, and how to explain it to your clients. Let's get into it. Funeral cover. What is it? Funeral cover pays a lump sum to help the family cover funeral costs without scrambling for money at the worst possible moment. There are 2 options. The family funeral option covers the employee, their spouse, and children under 21. It includes a stillbirth benefit of 5,000 Rand after 26 weeks of pregnancy, a premium waiver of 6 months if the employee dies, and the ability to add children after the policy starts. The member-only option covers the employee only, a simpler, lower-cost option that pays to the first listed beneficiary. Funeral cover payout amounts per person. The payout amount depends on who passed away and their relationship to the insured employee. The main member or spouse receives 100% of the cover amount. A child aged 14 to 21 also receives 100%. A child aged 6 to 13 receives 50%. A child aged 0 to 5 receives 50%, capped at 20,000 Rand. A stillborn baby after 26 weeks receives a fixed 5,000 Rand benefit. Under the member-only option, the employee's death triggers 100% of the cover amount. Premium waiver and body repatriation. There are 2 valuable added features that help differentiate this product. First is the premium waiver. If the main member, the employee, dies, the spouse and children keep their funeral cover for 6 more months at no cost. This gives the family time to arrange alternative cover without a gap in protection. Second, body repatriation is included in both funeral options and covers the return of remains within South Africa for all covered lives, up to 20,000 Rand per year per policy. For the employee specifically, this extends to SADC countries, including Namibia, Botswana, Zimbabwe, and Mozambique, up to 50,000 Rand per policy. Services within South Africa include locating the deceased, overnight accommodation for next of kin, referral to undertakers and pathologists, assistance with funeral arrangements and death certificate, and counseling referrals. SADC services cover storage, embalming, a zinc-lined casket for air transport, all documentation, clearance and cargo fees, road transport to Namibia, Botswana, Zimbabwe, Mozambique, etc., and air transport to capital cities of remaining SADC countries. How to explain it to a client? A funeral costs between 15,000 Rand and 100,000 Rand. Most families do not have that money sitting in their bank account. Funeral cover pays your family a lump sum within days so they can focus on grieving, not scrambling for money. With the family option, your employee's spouse and children are covered as well. And there is a premium waiver. If your employee dies, the family keeps their cover for 6 more months at no cost. Key facts to remember. Maximum cover is 100,000 Rand for the main life, spouse, and children over 14. Minimum cover is 5,000 Rand. Family members must reside in South Africa. The beneficiary can request that the payout goes directly to the funeral parlour. Part 6. Overview of Flexi Staff cover benefits. In this section, we will be looking at understanding free cover limits, all 5 benefits at a glance, maximum and minimum cover amounts, and covering employees under the Flexi Staff cover policy. Let's get started. Understanding free cover limits. Free cover means that no health questions are required up to this amount. Employees are automatically covered up to this free cover limit for cover. That is more than this. They must answer health questions for the excess amount for life, critical illness, and occupational disability. For life, CI and occupational disability cover. Groups of 1 to 4 employees have no free cover. 5 to 9 employees, 50,000 Rand. 10 to 49 employees, 500,000 Rand. 50 to 99 employees, 1 million Rand. 100 to 149 employees, 1,500,000 Rand, and 2 million Rand for 150 plus employees. For funeral free cover, groups of 1 to 4 employees have no free cover. 5 to 19 employees, 50,000 Rand. 20 employees and above gets 100,000 Rand cover for temporary income protection. Tip-free cover only kicks in from 20 employees upward, starting at 25,000 Rand per month. Important note, there's a 6-month waiting period for the spouse and children under the family funeral benefit. The waiting period may be waived if this policy replaces equivalent existing cover. Let's look at a summary of all 5 benefits. Life cover pays a lump sum to beneficiaries on death, stops at age 70 with a 1-year pre-existing exclusion for groups under 20 staff. Occupational disability pays a lump sum to the employee on permanent inability to work, stops at age 65, reducing from 60 with a 1-year pre-existing exclusion. Critical illness pays a lump sum on a qualifying severe diagnosis, stops at 65 with a 2-year exclusion. Temporary income protection pays a monthly income for temporary inability to do the job, stops at 65 with 1-year exclusion. And funeral cover pays a lump sum for funeral costs on the death of the member or a family member. The member is covered to age 70, children to age 21, with a 6-month waiting period. Use this slide as your go-to reference when comparing benefits with a client. This is your consolidated reference for cover limits. Life cover. Minimum 50,000 Rand. Maximum 5 times annual salary linked or 8 times lowest earner salary fixed, capped at 2.5 million. Occupational disability, but cannot exceed the life cover selected, capped at 2.5 million. Critical illness, 3 times salary linked or 4 times lowest earner salary fixed, capped at the life cover amount and 2.5 million. Temporary income protection, always a percentage of monthly salary, capped at the lower of take-home pay and 100,000 Rand. Funeral, 100,000 for the main life, spouse, and children over 14. 50% for younger children, minimum 5,000 Rand. It's important to remember that Simply applies maximum cover on a consolidated basis across all Simply policies. This means that the insured person's total cover across all policies combined cannot exceed these limits. Here are some things to note about Simply's Flexi Staff cover policy. Let's start with eligibility. To qualify for Simply Staff cover, there must be a verifiable employer-employee relationship, confirmed by a payslip or employment contract. Employees must be between the ages of 18 and 64, though cover for life and funeral benefits only can extend to age 69, provided the employee was on the policy before age 65. Employees must be on a permanent contract or a temporary contract of at least 6 months and working a minimum of 20 hours per week within South Africa. They also need to be actively at work on the day cover commences, meaning fully present and able to perform their normal duties. Employees on sick or disability leave will need to either provide proof of good health or complete 8 consecutive weeks without absence before cover can begin. And of course, all employees must be legally authorized to work in South Africa with a valid work permit and passport. Now, which employees need to be covered? This is an important point for your clients to understand. The policy must cover all eligible employees. Alternatively, it can cover all employees within a clearly defined group, such as all call center agents. Neither the employer nor the individual employee has the option to opt out. What about adding employees or increasing cover later on? Adding new employees is compulsory and must be done at least 1 week before the next premium due date. Your clients can do this through the self-service portal via you as their broker or automatically through payroll integration. Standard underwriting rules apply from each employee's individual start date. When it comes to benefit increases, these must apply across the board, not to selected individuals. The increased portion is treated as new cover, which means health questions may apply, and a new pre-existing condition exclusion period will apply to that additional amount only. Existing cover remains unaffected. One exception worth noting, increases driven by salary changes are exempt from these requirements. Finally, let's talk about policy renewal. The policy renews automatically on the 1st of June each year. At renewal, premiums are reviewed and adjusted based on the group's risk profile, taking into account age mix, gender mix, claims experience, and any regulatory changes. Either party can choose not to renew. If premiums are set to change, at least 60 days notice will be given, giving the employer the opportunity to accept the new terms, adjust their benefits, or cancel the policy. Here you can see Simply's full product matrix. It's also on our website. Here you can find the complete breakdown of all Simply products, with cover minimums, maximums, eligible ages, and requirements. This is a great resource when a client asks about product details. To close out, here's the 6-step sales process. Step 1, needs analysis. Understand the employer's workforce, their risk profile, and what benefits matter most to them. Step 2, generate a quote. Use the advisor portal at advisor.simply.co.za to get an instant live quote and use real-time sliders to adjust cover and prices. Step 3, discuss. Walk the employer through the options available, the costs, and the value. Step 4, let the client decide what benefits they want for their staff. The entire process is paperless and handled online, so they can sign up right then and there as they sit with you. Step 5, instant decision. No waiting, no underwriting delays. When the client is comfortable with their choice, they will receive an OTP that you submit as confirmation of their choice. Step 6, the policy is in force. Employees are instantly covered. This is one of the fastest and most straightforward group insurance products to place. Policy documents will be sent via email and beneficiaries collected via SMS and WhatsApp. Congratulations, your client now has cover.